The market rollover that we've been discussing for the past week is in full gear. This coincides with the new OPEX cycle, which started this Monday, and the S&P 500 was down 0.5%, closing at 6604.72. If you go back to our recent YouTube videos over the last several trading sessions, we've been talking about the gamma exposure at the 6500 strike and the 6600 strike, which appears to be pretty sticky. A lot of times there's growing gamma exposure at higher strikes as the trend is trailing into those higher levels. Well, at the start of this new OPEX cycle, we're actually seeing gamma exposure at lower strikes, signaling that the potential for a slight rollover or consolidation in the market was a high probability event, and that's exactly what we've gotten over the last 3 trading sessions. But I did note today intraday that we saw 2 instances where buyers really stepped up in this 65.70, 65.75 area. Right at the open off the big gap down, we saw buyers immediately step in this morning, and then again later in the afternoon as we rolled over back into that level, we made just a slight lower low, buyers once again stepping in, and we rallied into the close. Still was a down day overall, pinning very near to the big 6600 strike, as I mentioned, which is on our gamma exposure data. If we take a look at our historical gamma exposure data graph, we did close today in negative gamma exposure territory. This is something that oftentimes signals a potential reversal. You know, we got to close back here on September 2nd in negative gamma exposure territory, but that actually marked the bottom and the start of this near-term market rally that we've been on over the last 3 weeks. So will that happen this time around? That remains to be seen. Generally, our perspective is that the longer we hang out in negative gamma exposure territory, so if you see 3 or 4 closes in negative gamma exposure territory, especially with lower and lower GEX readings, that can often precede another leg down in the market. We're going to be monitoring the gamma exposure data tomorrow in real time. You can check us out in our community Discord if you want to see what we're talking about. Link in the description below, but we'll be assessing to see where gamma exposure is likely to close as we monitor it throughout the trading session.
Thanks, Anthony. Let's take a quick look at IWM. IWM has continued to be a pretty good indicator for us, both intraday and looking at larger time frames as we moved through this week. And so we noted earlier this week that the 250 GEX cluster was mostly centered around September 30. That has now moved to October 17. Not unexpected given the gap down today, even though IWM actually closed with positive performance if you look strictly at the cash session. So we're still left with the possibility that we noted early in the week that we see a dip this week, which is also marked by seasonal tendencies. I think today's low is 237.55 or so. That's pretty much where we were looking for a buying opportunity on IWM. So this certainly introduces some shorter term bullish possibilities.
Thanks, Sean. Next, we're going to take a look at a few names that have some really ripe trade setups on this market pullback. We'll start with Shopify. Today it was down 3.61%, closing at 143.46. Shopify has been one of the big movers ever since the lows back in April and has seen a little bit of a double top kind of consolidation pattern over the last month, coming just back towards the 50-day EMA. That's this red line on our chart. And I actually think the pullback over the last 3 or 4 trading sessions is a really great opportunity. Every single time we've dipped down towards this 50 EMA ever since May of this year has resulted in a spike higher. And I think there's a good probability that that's going to be the case at this level as well. So we're not quite all the way down to that 50 EMA, but we can see even last time, back here at the end of August when we dipped down there, we didn't quite make it all the way to that 50 EMA line. So I think anywhere between the 50 EMA and this level that we closed at today looks like a great place to enter a long position. When we look at the gamma exposure data, we can see large gamma exposure concentrated at the 145 strike and the 150 strike, and we even have gamma exposure growing at the 160 strike as well. So I think we've got pretty strong support from 135 and above. You can see this is kind of the bottom end of our gamma exposure structure. We have some smaller gamma exposure levels down below, but the main structure is really between this 135 and 160 strike. So sitting down here near the bottom end of this range, I think is a really great entry point, along with the technical factors and the trend that we continue to remain inside. So this looks like a really great setup. from our perspective. We're going to be looking to add this to our portfolio either tomorrow or on Monday. By the way, you can track our trades in real time as we manage our options portfolio by becoming a member at geeksoffinance.com. You can also get a sneak peek of our trades for free by joining our community Discord. I'll put links in the description below to both of those so you guys can check it out when you get a chance.
Thanks, Anthony. Let's come back around to the VIX again. Yesterday, we noted that the VIX showed that we weren't quite out of the woods yet, with the VIX still closing above this rising whole moving average. And today we did the same thing. We saw a higher low, a higher high. We see this upward trend continuing. The VIX is holding above the whole moving average at 1626. And we see the VIX almost reaching the 18 strike that we mentioned as a possible target. The move is still intact to see a little bit larger spike before we see a sustainable rebound in the market, of course, including GEX in our decisions and buying the market on dips as we anticipate higher highs into the end of the year.
Thanks, Sean. The next setup that's looking pretty juicy to me is Marvell, MRVL. Today was up 4.64%, closing at 83.81, coming into a really interesting zone. This was previous resistance right around this 84 strike back at the end of July, beginning of August timeframe. And you can see this is also back in March, where Marvell really took a big dip down below this same 84 level. So clearly this is a very important pivot zone going back into 2024. And I think the fact that we're coming back up to this zone right here with names like Micron and several others that have really broken out recently, and Marvell could be the next player on that list to break out. When we look at the gamma exposure data, clearly the largest GEX level is at the 80 strike, which we blew through today. And we're seeing gamma exposure growing at 85, 90, 95, and 100. So there's that classic stair-step pattern that we see precede a lot of trends that move higher into these upper strikes. We're also today seeing a lot of volume in the options market between the 80 and the 90 strike, and we even saw nearly 10,000 contracts up at the 100 strike. So I think this is a potential breakout zone. We're going to be looking at this at the open tomorrow to see where it opens up. Basically, any move and close above the 84 level is going to look like a breakout in my mind. And so I think this makes sense to potentially position for a speculative breakout higher somewhere into the 90 to 100 zone. So again, this is another name that's going high up on our watch list, and we're going to potentially be putting a trade on this name in our portfolio tomorrow.
Thanks, Anthony. Let's take a look at SMH, which of course includes a lot of the semiconductors that make up the largest holdings within the semiconductor sector. You can see we have this big positive GEX cluster right here at 325. That's just above the whole moving average at 323. But I do see some cautionary signals here in that we're closing just below the whole moving average with SMH at 321 compared to that whole moving average at 323. We also, if you look above 320, the volume drops off significantly. We actually saw higher volume at a lot of strikes, ranging from 290 up to about the 310 area, which dwarfed that volume that we saw above 325. So certainly something to keep an eye on. What the bears would want to see is a rejection from this 323 area, even if we poke just above it, but then close below it, with possibly the 310 or 300 area representing a more solid target for this downturn. Going along with that, you can see despite SMH's very strong effort to rebound today, basically closing flat, we saw GEX actually move into negative territory. So, participants did not jump on the bullish bandwagon in terms of shifting SMH to positive GEX territory. Instead, we saw a further decline into negative GEX territory. I also noticed this was true with a lot of the major indices. So even if we see a bounce tomorrow, I think we need to be cautious in the very short term, once again, with the idea that we buy dips into a year-end rally.
And guys, just a reminder, you can still get $300 off our yearly portfolio manager tier subscription. Use code September 2025 at checkout. We do have a few spots remaining, but this promotion is going to be ending soon, so definitely take advantage of it while you can. Members get full access to our gamma exposure dashboard, our option flow analytics tools, as well as our algorithmic trading strategies. And you'll also get access to the premium channels in our community Discord. You can track our trades in real time as we manage our options portfolio. And there's a ton of other great traders in there sharing their own trade setups and ideas as well. So it's a great resource. You definitely don't want to miss that. Links in the description below to all of that so you guys can check it out when you get a chance. Thanks so much, everybody, for watching. We'll see you guys in the next video.